You want to cut through the noise and understand what's really happening with Tesla right now. We get it.
Yeah, there's a lot out there.
This is your shortcut. We've dived deep into their latest financial report. That's the Form 10Q for the quarter ending March 31st, 2025.
Mm-hmm. The official source.
Think of this as your express lane to the critical insights, the challenges they're navigating, and maybe where they might be headed.
Exactly.
Our mission today is really to bring some clarity using those official filings.
Right. And this isn't just about us, like, reading numbers out loud.
No, definitely not.
We're here to explore the story behind those numbers in Tesla's quarterly report, to sort of dissect what's truly significant about their recent performance.
Okay.
We'll look at, overall financial health, how the different bits of the business are doing, automotive, energy.
And the key factors influencing things, right?
Yeah.
Production, demand, even those ongoing legal bits.
All of it. So, shall we jump into the financials? Let's do it. Okay, financial highlights. Big picture. For the first 3 months of 2025, Tesla's total revenue, $19.34 billion.
Okay.
Now, here's something to note that's actually down compared to the same time in 2024. They did $21.301 billion then.
A noticeable decrease, yeah.
And we also saw a dip in their net income. That's the profit attributable to common stockholders. It landed at $409 million.
Wow, $409 million from this, what was it last year?
Considerably higher, $1.390 billion the year before.
Okay, so revenue down, net income significantly down.
Yeah, net income, just for clarity, that's basically profit after all the expenses and taxes are paid.
But here's where it gets interesting, right? Despite those drops, their cash and investments actually went up. They finished the quarter with a really robust $37 billion.
$37 billion, that's up from the end of 2024.
Yeah, a noticeable increase. Makes you wonder, doesn't it? Maybe prioritizing stability or perhaps holding capital for, well, for those new models maybe. Could be. And speaking of cash, their operating cash flow, the cash generated from actual operations, saw a really significant jump.
Oh, yeah. How much?
It hit $2.16 billion in Q1 2025.
Wow.
Which is a huge leap from just $242 million in Q1 2024.
Okay, that is a dramatic shift, generating way more cash from the core business.
Definitely.
And if we connect that maybe to their spending, capital expenditures were down too.
They were. CapEx dropped to $1.49 billion. Last year, same quarter, it was $2.78 billion.
So less spending on, like, factories and equipment.
Exactly. Property, plant, equipment, that kind of stuff.
So that reduction, could it be they're consolidating after expanding so fast? Or maybe, like you said, shifting resources, perhaps R&D for the new platform or the robotaxi?
Both seem plausible. One last overall number. Gross profit for Q1 was $3.153 billion.
Okay, so that's revenue minus the direct costs of making things.
Right. And that figure is also lower than last year's $3.696 billion.
So summing up the financials, contraction in revenue, net income, gross profit compared to last year, but a stronger cash position overall and much better operating cash flow.
Exactly. So the big question is, what's driving these shifts?
To really get it, we need to break it down segment by segment, starting with automotive.
Makes sense, right? Automotive division. Let's look at the revenue streams. Actual car sales brought in $12.925 billion.
Which is down following the overall trend, down from over $16 billion. Yeah.
Correct, down from $16.468 billion. But revenue from regulatory credits actually increased.
The ZEV credits.
How much? $595 million, up from $442 million. Quick reminder for listeners, those are credits Tesla earns for selling zero-emission cars, which other automakers might buy.
Right, if they can't meet the standards themselves, a nice side income.
And leasing revenue also saw a slight decrease, $447 million compared to $476 million last year.
Okay.
So adding it all up, total automotive revenue is $13.967 billion.
Down from $17.378 billion. And the cost to make those cars.
That also decreased, logically. Landed at $11.700 billion, down from $14.166 billion.
So what do those automotive numbers really tell you? What jumps out?
For me, it's that big drop in revenue from actually selling cars.
Yeah.
Even with the boost from credits. It definitely makes you ask about demand, pricing, what's happening in the market.
Absolutely. And the report gives some clues, maybe. Production versus deliveries, they produced about 363,000 vehicles, but delivered only around 337,000.
Right, that gap. What could that mean? Logistics. Or maybe demand softening a bit.
Could be either, or both. And production itself had some interesting points.
Yeah, this is where it gets really interesting. They talked about a simultaneous changeover of the production lines for the new Model Y.
Across all
All
factories.
of them. Sounds like a huge undertaking.
Eh.
And they openly said it resulted in some lost production time.
But they framed it positively, right? Like an operational advancement?
Yeah, enhancing efficiency, and they're also prepping for new models later this year. Vehicles on that next-gen platform everyone's waiting for.
And the robotaxi. Or, cybercab, as they're calling it now.
Cybercab, right. So that simultaneous changeover, what's the takeaway there? Manufacturing strategy, agility,
Well, it's definitely bold. Shows they want to roll out refreshed products fast.
but risky.
Oh, for sure. Highlights the complexity of managing that global production network. But forging ahead with the new models, the next-gen stuff, the robotaxi, that clearly signals their long-term vision, personal transport and autonomy.
And what about demand? What factors did they mention?
Well, they point to their own efforts, cost reduction, pushing AI features like FSD, which is now supervised,
Right.
and just the general buzz around the upcoming new vehicles.
But they also acknowledged the headwinds, didn't they?
Oh, yeah. Clearly stated they're sensitive to the broader economy. Things like inflation, hitting wallets, rising interest rates, making loans pricier.
And competition. The EV market is getting crowded.
Exactly. Plus, they flagged potential changes in trade policy as a risk, too.
Those economic factors feel really key. Cars are big purchases.
Absolutely. Discretionary spending. So sales are tied to economic confidence, financing costs, and yeah, competition means they can't just rely on the brand anymore. Innovation, pricing, gotta be sharp.
And the trade policy mentioned, just a reminder of how global their whole operation is.
Definitely introduces potential instability there.
Okay, one more thing in automotive. Deferred revenue. This is significant.
Yeah, the money collected but not yet fully recognized. FSD, connectivity.
Right. As of March 31st, it stood at $3.6 billion.
Wow, billion.
Yeah, they recognized $258 million of it in Q1, and they expect to recognize another $780 million over the next 12 months.
So that's like future revenue already locked in, essentially.
Pretty much on the books.
That's a really important number. It shows customer commitment to the software side. And knowing they expect to book a chunk soon gives some insight into the rest of the year's performance.
Okay, good point.
Shall we pivot to the energy segment?
Let's do it. And this side of the business actually tells a very different story for Q1.
How so?
Revenue here shot up,
Yeah.
$2.73 billion.
Compared to what last year?
Just $1.635 billion in Q1 2024. So a really significant increase.
Okay, that's strong growth. What about the costs?
Costs also rose to $1.945 billion from $1.232 billion.
Makes sense with higher revenue, probably higher volume or component costs. But strong top-line growth in energy is definitely a positive sign. Demand for solar and storage seems up.
And deployments reflect that. They deployed a massive 10.4 gigawatt hours GWH of energy storage products in Q1.
10.4 GWH, that's huge.
It's seriously impressive.
Really underscores how important energy storage is becoming in their overall strategy, especially with the global shift to renewables.
And just like automotive, they have deferred revenue here too, mostly from customer prepayments.
Okay, how much?
$2.09 billion as of March 31st, up from $1.77 billion. They recognized $623 million of it in Q1.
So again, future revenue stream.
A big one. They have $9.95 billion, almost $10 billion in remaining performance obligations for contracts longer than a year.
Wow. And how much of that is expected soon?
$4.71 billion expected to be recognized in the next 12 months.
Okay, so a very healthy pipeline for the energy business.
Definitely looks that way. They do note, though, that government incentives and potential tariffs could really impact this segment.
Right. That's always a factor in clean energy. Policy can make or break things. It highlights those external factors shaping the whole sector's growth.
Okay, so let's zoom out now. Look at some key overarching factors, maybe risks, highlighted in the report.
Sure. Supply chain still seems to be a theme.
Yeah, ongoing risks, reliance on single-source suppliers for some parts, and the uncertainty around trade policies again.
It's a constant balancing act for any global manufacturer, isn't it? Managing those dependencies is just crucial for keeping production smooth and costs down.
Interestingly, their accrued warranty, the money set aside for future warranty claims, actually went up.
Oh, by how much?
Ended Q1 at $7.214 billion, up from $6.716 billion at the start of the period. That's a noticeable jump.
That is interesting. Could that suggest maybe higher anticipated repair costs, maybe new product lines, or just more cars on the road needing service?
Something else. It's hard to say for sure from just this number.
Yeah, it could be linked to various things. Definitely a figure worth keeping an eye on in future reports, see if it's a trend.
And digital assets, they still hold in Bitcoin.
They are 11,509 units as of March 31st.
Then the value.
Fair value was $951 million, which is way up from their original cost of $386 million.
So a nice paper gain there. They also mentioned a change in accounting standards for digital assets, making things clearer.
Right. ASU 2023-08 basically aims for more transparency in how they value and report crypto holdings, which can be pretty volatile.
Makes sense. What about debt?
Total debt and finance leases were $7.268 billion and $5.292 billion net of the current bit, respectively.
Oh.
But they did amend their China working capital facility, extended its availability through April 2028.
Seems important given how big China is for them, securing funding there.
Absolutely. Underscores their commitment to manufacturing and sales in that key region. Gives them financial flexibility.
Okay, finally, and this is a big section in the report, the legal proceedings.
Ah, yes. Always an important area for investors to watch, and Tesla's got quite a list.
It's pretty extensive.
Yeah.
Starting with that long-running 2018 CEO Performance Award case.
The Elon Musk pay package one. What's the latest?
The appeal to the Delaware Supreme Court is underway. Briefs filed. They specifically warn that if they lose the appeal, it could have a material adverse impact. Uncertainty, potential huge costs, if they have to redo that massive compensation package.
Yeah, that SOG has been watched closely. An unfavorable ruling there would definitely be significant.
Then there's the director's compensation lawsuit. A settlement was approved.
Right.
But Tesla is now appealing the amount of attorney's fees awarded in that settlement.
Arguing over the legal bill even after settling the main case.
Seems so. They expect to implement the settlement itself in May 2025, which results in a $110 million net increase to additional paid-in capital in Q1.
Okay, so there's a clear financial impact booked there, even with the fee dispute ongoing. Highlights the cost of shareholder litigation.
They're also still facing derivative lawsuits. Remember the potential going private idea from years ago?
Vaguely, yeah.
Lawsuits related to that, plus newer ones tied to X Corp, formerly Twitter, and X.AI.
Musk's other ventures drawing legal fire towards Tesla.
Appears so. Motions to dismiss were filed in April, so that's the next step there.
Just underscores the intense scrutiny they operate under. Every major decision seems to attract legal challenges.
And the litigation around alleged discrimination and harassment continues too.
Right, the California Civil Rights Department case.
That trial is scheduled for September 2025. A related suit in Texas was dismissed, but this area clearly remains a risk.
Yeah, those are serious allegations, potential for significant financial and reputational damage there, regardless of the outcome.
Plus a whole range of product and service lawsuits, class actions about autopilot and FSD capabilities.
Always a hot topic.
And also their repair practices. Some cases pushed to arbitration or dismissed, but appeals are ongoing in others.
So still fighting battles on that front.
Seems like it. And, maybe unsurprisingly, ongoing info requests and investigations from regulators.
Standard for a company this size and profile, probably.
And finally, that data security incident from Q2 2023. That's now led to class action lawsuits being filed.
Okay. So, yeah, the legal landscape is active and complex.
That's putting it mildly.
It really is an extensive list, spanning executive pay, product liability, data security, workplace issues. It just highlights the huge range of risks a company like Tesla faces. Each one carries potential financial and operational consequences.
Okay, so wrapping this up, bringing this deep dive to a close, what are the key takeaways for our listeners from this 10Q?
Well, stepping back,
Yeah.
we saw revenue and net income down in Q1 compared to last year. That's clear. But importantly, operating cash flow is way up, and they're sitting on a big pile of cash and investments.
Right. And operationally, they're juggling that Model Y production changeover while prepping for the next big things, new platforms, robotaxi, cybercab.
Cybercab, right. And they're doing all this against a backdrop of, well, economic headwinds, more competition.
And all those legal challenges we just ran through across both automotive and energy.
But despite all that, the focus remains clearly on future growth, driven by tech and new products.
So for you, the learner, listening in, we hope this dive into the official report gives you a clearer, fuller picture.
Yeah, a better understanding of Tesla's current state financials, operations, challenges, it really shows the complexity of running a company that's at the intersection of tech and automotive.
It really does. Which leads us to a final thought for you to chew on. How does Tesla balance those really ambitious growth plans, like autonomy, next-gen cars, with the very real economic and legal uncertainties they're facing right now?
Yeah, what do you think are the biggest hurdles Tesla needs to clear to actually achieve that long-term vision for transport and energy? Something to ponder.